Good morning, Anton Hopfel for Manapa, and this is our 2-hour session for the Bund future today. It's Friday, the last day of the week, the 16th of August. 2 minutes to go. We see that we had some trending up in the evening and then also overnight session here. You can see it, how the prices went up. And we had some serious accumulation, of course, when starting to go into the trend, and also when setting back, pulling back to this area where quite some volume was built. But then, after the cash session, you see that this whole move wasn't confirmed by volume. You see that volume decreases every step up, decreases every step, decreases. At the end, we have some kind of single print at the top area. When you're watching then the ongoing overnight session here, we see that prices were falling down lower and lower, and at the end, the prices at the overnight end tested the low volume node again. Then, in the early pre-market, prices went down to this accumulation area. And you see indeed that prices then was stopped selling into the level of 02, 03, and you see then new buyers coming in. So right now we're at the open, and we want to see if we can trade back to this area around here to get a cheap entry for a range long trade. Or if they get through the 02 level with increasing selling volume and some little holding, they'll be looking for the short with the targets at the 178.80. So welcome, good trading, good learning. Also, one thing is important. When you take a look to yesterday's profile, you see that at the moment we're not at the top area of the yesterday's profile. So as we were the last days, that means there's no trend set up starting from here. This is very important. That means the OTF participants may not be so huge at that upside to trying to play some trend plays here. So this is of course then an advantage for the short-term traders. This is more than a setting today only from the big picture for the range plays. So that means if there are the signs for the range plays, then we have some good risk reward, and you can see it already here in the morning distribution. It's a normal shape distribution. See this here? And we have some very cool target areas now. That means the range is spread enough to get into lucrative trades from the setup in terms of range plays. So this is the activity area. We want to see now responsive buying. And important is that we're not seeing a lower attempt of sellers kicking out the before low. So this is the area where we're looking. If there is responsive buying and no more ongoing sell pressure, then this is a good area to enter the trade here with the targets around the 12-13 area. Quite good for the range. And second target, even the edge at the 1920. But first we want to see here now the responsive buying, which already have started. And you can decide to go it more aggressive, entering now anticipating, or you wait for a second attempt, people selling, and seeing that they can't go lower, that the edge here at the 0403 level, and got them rejected with again buyers coming in. So this would the way I look for, and then I try to be quick. And if there are signs not coming, expecting hypo 2 with increasing sell volume and holding, then we look for the short, but not immediately, all right? Third thing is, if nothing of this happens, then we stay flat. Alright, they playing again the short. That means we are in this trade, and you see then quick rejection on the upside. Quick rejection on the upside. You can now either decide to stop here, short below at the 03 level to get you out of the play, or you even get out before at this moment. But in this case, we will see there is a second chance to enter this trade, but only if we see strong rejection now also on the upside. That means there was just some fishing for liquidity. And if you see this boom, strong rejection now from the buyers again, we re-enter this trade. If not, we stay flat until we see either this rejection I told you, or we see the increasing selling volume now pushing at the bottom. That it means still interested in selling now at the bottom, which means confirms now this first trend of rejection here. So very important to see now that either one of these things are happen. If not, then we stay flat, because then this would be just then an emotional trade. But we don't emotional trade. I'm flat. We haven't seen the seller increase at the low level, and we haven't also not seen yet the rejection of buyers. That means right now we are in a neutral situation. Some people are in the shorts, the people who are long got stopped out here, then people are in the shorts, and now we need to see if it was just only pushing to the downside, then it's just a little bit fishing, looking for liquidity. And we remember we will go into the long now if we see the boom, push again to the upside, some little pullback to get in cheap with the stop at the low area. And we wait for this. Or if we coming now back to the low and see then increasing selling volume, we wait for the small pullback with not too much buy volume and then go into the short. And if nothing happens, we stay flat. But remember this is just objectively what I would read now the market, and still thinking of this is a good scenario for both trade directions if we see the trigger we need to see. So everything perfect. Buyers are back. So see, this was the situation. The buyers came back here. We now got some little tiny pullback here to the 09 area. And now we trying to stay in this trade here. As we see that the buyers coming back, we see no more selling. The sellers who tried to get into more shorts were rejected. Buyers coming back again. So right now there is the edge for a play, at least here with the target for me at the 15 area, because this was the pre-market, this is the middle, this was the pre-market POC. So let's see if the buyers having now enough strength after seeing that the seller's appearance wasn't that really huge. I think you will agree that we have some edge now, that at least we see the 15 area, or if you're trading I don't know, more lots or something, then you would even go here and wait for the trend for the trade getting to the higher volume edge of the pre-market. This is at the 20. We'll see now what happens. Obviously, what we not want to see is, as the price now hitting then this area of a small this small area from the open range high, we don't want to see that they got rejected and pulling back and got rejected again. It would be like, okay, we're not gonna go higher, then we accept this area, this is our balanced area then. So we will see what happens. Of course, we will have some technical reactions right now here at this area. You see some people taking some profits and so, but we know that this is allowed. What we not want to see is that they coming back here again and then pushing down to the downside again. This wouldn't be not allowed. So right now my stop is, as you see, that impulse phase, of course, one started with this candle again. We made a new high, getting into the more confident buying process. Of course, my stop is now pulled closer from -4 to -3. If I see now them hitting the new, taking out this high and either crashing already in my target or just taking out this high by one tick with a new attempt of buyers, then I pull my stop to the entry level. And before I do nothing, either got stopped out, waiting now for just the signs what to do. Tell me what to do. Okay, remember, see now market, we see the technical reactions. Now remember, we see markets now coming back to the high of this edge. What we not want to see is ongoing rejection, ongoing responsive selling already here. This would be a sign that we are not in advantage, that we not have a high probability anymore to get our target here at the 15. This right now is allowed, but we need to see, we don't want to see now sellers selling continue or absorption doesn't take place. We want to see at the high either selling got absorbed or we see active buying coming in. If none of this happens, that it makes sense to even pull your stop closer to not get stopped out here at your entry level, because then price may get back here to the low. And that means that they already accept this open range that would be a little bit disappointing, but hey, you have to react on what the market is doing. So if market decides or there's a lack of trader who can push it above here, then that's the way it is. Right now everything is normal. Can happen, as I said, here will we see some technical reaction, and that's normal here. It takes some time. You still got two chances, that it go up and we test the 15 or even the 20, and if the rejection now is getting stronger and no absorption, then at the moment they just accept this value then, and that's then the way it is. So okay, right now it's happening. I take out this position Of course we do. All right, we went through with a big volume. You see right now, they even let them pulling back at the moment. You see this little pullback is now not happening. We will see. We will see. Either they're coming now strong bulls, or that's the moment here to enter. Okay, I've entered, but unfortunately didn't. I had automatic target with +4, so I already reached my target with +4, but I wanted to stay in this trade till we hit the 90 area. So I hope you are still in this trade. So I can show you, I have this automatic target. Normally I have time to set my target then manually. You see here, as I entered, this was my second trade here, that didn't work out. And you see here, I entered and my profit target already was set to +4, so I immediately hit my profit. I didn't want to do this because this trade is having a chance without seeing rejection to get to the 90 and 80 area. So please now, if you're in this trade, stay in this trade. Your stop can be tied above at -4 area here. If you entered like me at the 01, as I told you, we see pullback but no rejection yet. And your stop can be then here about the 05 or 04 level. So that means 3 to 4 ticks. And we stay in this trade because we have a profitable trade here. And we could see the 90 or even the 80 area. So we stay in this trade as long as we don't see the double rejection of buyers. Because think of it, we now have left the distribution where all the accumulation took place. We see increasing selling volume. Now the advantage on your side because reward is quite good. The next POC is only at the 91, a small, tiny, and then the big, huge volume edge of yesterday, well, you're a high area, here around the 80 area. That means prices may test and fill out this LVN. And okay, we stay in this trade. I will talk live the profit management then. See our internal, see how delta is on your side to reaching this minor PSC at 93. Boom, and we hit it, 93. You not got filled yet because there was only 66 contracts sold, but you're still in this game. You can now pull your stop to the entry area, means to the 01, 02 area. May secure around this area now may secure your first position now. We're waiting now and we see still increase in selling volume, and sell volume keeps on going. All right, we're reaching now the 93. You got filled now with 90 at the 93 level. If you have another position, you stay in this position. You have your stop on scratch, you already secured your first profits. And we know our next target here is the volume edge from this bigger yesterday distribution from the accumulation area. This started at the 83 and goes down to this 80 area. So that means next target would be around the 83 starting here. This will be then your target for the last position you may have. everything's under control. Sellers are still in control right now. So that means starting from this level here, you see here in the delta, when arriving at the top area, you see again sellers coming in. Now, of course, they need to take on pressure, and take out the 93 again to have then the probable target to get to the target 83. What we now want to see is now that they take out the high. We give it then the chance to go back to the low area. And when they're going back to the low, what we not want to see then is a responsive buying already with the second leg on the downside. Then you can secure your win, because then the probability, the edge is more than on the reversal side. But as long as this is not happening, we stay in this trade, because you remember house money, we're paid. There's at the entry level, you stop, nothing can happen, and you know what's your advantage right now. And we have measured this. This is our hypo 2 from our big picture preparation for a possible 10 to 20 ticks trade. Seeing right now there's a little bit of lack of ongoing selling pressure like we had in this first and second wave here. That means right now we see some little bit balanced mode. This is normally, and then now they take it on again. They take it on again. Wonderful. That means most definitely your stop will not be changed. We just wait for the market to tell us what to do. And right now, we want to see now getting deeper into this low volume node and knowing that there's our volume edge starting at the 83 to the 80 area where yesterday the trend started. That means they may test this area again. And you see also confirmed here that the market telling you here is where the liquidity, of course, is then provided. This is where the people are already putting in money, liquidity in the bid, in the order book. So this is also, of course, a confirmation that this is an area, of course, of interest. So we stay in this trade because delta is on your side. They keep on pushing, and even though we see also some people buying here, we just stay in this trade. You're paid. You are paid, and 83 is our target. Because this is the initial buying area of yesterday trends where the bulls, where we can expect the bulls, let's call it bulls defense level. All right, you see, protecting now, providing liquidity in the ask means people want to stay in this trade. People still want to take on short positions here. Still, everything is on your side. That's why we put this graphs into the chart. Just like big huge liquidity is popping up here at my chart, so I can see if they're still interested. And you see in the Bund that there is no, this is not spoofing because it's so close to the price, and Bund, you're not gonna spoof this big number of contracts because you got filled and then sitting in this, and it would look different if it's a spoofing. So 894, 900 contracts here provided at 178.90. Still, sellers at least want to stay here in control, and target 2 are almost reached. Liquidity is real. liquidity is real. They just tested the liquidity. One guy bought at the 90. Liquidity is real, is still here, 900. So that means this is a very good sign now. If people now really able to take out this 800 contracts, then this would be a sign of strength that we may go more into the reversal mode. Then anyway, we let the market, okay, they traded it. 800 contracts got traded, 873 they took on this liquidity. So you see now more sellers and more people closing their shorts now, but we give this trade a chance to hit the 83 again, to at least hit and make a second leg here. This is important now. We're not gonna take out this third position and take in the profits too quick, because there's always time to decide this. And what we want to see now is if it's not getting a reshaped reversal, what's sometimes happening but not so often, then okay, so what? But normally now we get a chance and see a second test, a second leg of the down. And if we see responsive buying again here, then you can take out your third position. But I would not take it out before, because it gives you the chance to see if we can stay alive and even take on the low again, or if not. And if not, you have a better price here to take it out at this area with the rejection, then just take it out now as you see, oh, we're getting higher, 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 higher. We wait. We're good traders. So here, this is the second possible, the third possible target area. Yesterday value area high, minor PC here where the liquidity is. So we wait now for the retest, for the reshort. You see now this is the reshort now starting, and so that's now why we give it a try to at least test, make it some kind of second leg, and we wait for this. We stay in this game as long as we don't see on halfway or on the low the big buying rejection now. We stay in this position to conserve the chance of getting our target. No matter if it's only a 20 or 30% chance, it's still then a chance for the third position here to get a almost 20 ticks. So this is good enough for me. And on the other side, the risk is 0. So that means we stay patient. And we're now at this area. And what we not want to see now is a boom buying coming in already here. That means people now really want to play, would play the long now, reversing, and would test then the area here of 179.01.02. And this is what we not want to see, because then they test the selling control, the initial selling control level. But as long as this is not happening, the big buying rejection already here at the top, we say volume measures, and if there is no signs, we stay in this trade and wait for getting down here again. This haven't happened yet. wait for it. First signs of bias rejection. I wouldn't leave yet. I would not leave. Okay, now they buy. All right, now you can secure your profit. You waited patient for it. You see this double leg was about to create. Already at the half year, buyers coming back. And now at the top again, people buying. Sorry. Sorry, you see it here. Halfway back test, second leg, no more selling. Selling starting, no more selling. And now people got into buying, and now even at the top, buying. So at this moment when I said, now you can secure your profits, price is now about higher probability to take on the level, as I said, 179.0, 01, 02 again. And yeah, that's happening actually right now. They now taken on this level again. And now you can think of what you see here. If you see here, we're trying to get up and then got rejected and selling appears again, then this is then not the moment here to look for the long to re-enter the morning open range. So please be patient about this. Yeah, but anyway, I think this was really, really interesting. And as you see, as talking to you, I wasn't able to manage my own trade, as I did not manually set my target to the target area, where was it, 93 and 80, but I immediately reached my target as the plop to the downside was immediately reaching my before set it +4 target. I have always a +4 target, and unfortunately I wasn't quick enough by talking. So yeah, damn it. See, guy, I'm even better to guide you through the trade than I'm handling then my own position, because yeah, what it said that about men's and women, that men cannot multitask. I think, yeah, I think this was the clear evidence. Men can't. All right. Price are out now at the top area, testing the seller's control level. As I told you here, we have now a higher probability if they got already rejected, that we see now the 179 and 1 and 2 even. And right now they playing this level, haven't not reached it yet, but almost. Now seeing at the VWAP, of course, people here at this area looking, waiting for if there's still a seller who's now saying, wow, cool, very cheap now to enter here for the short again, or not. All right, you see now here they re-entered this distribution from the pre-market. Sorry, from the cash market here, from the cash open, which happens here from 13 down to the 9.5, where they tried to play the long here and failed. Couldn't get above the 13, and now we fell back. We testing this low volume node area and even made it below the 93 and even to this edge here at the 87 level. Did we make it? Oh yeah, to the 86, 87 level. See this here. Did not reach the 93 at 83, but rejected them with a second leg here, and now re-entering the cash upper distribution after the cash open. So you can see why it made sense then to take your profit here. You see then why it made sense then to take your profit here as they take out. You see, you remember this phase here. First leg here. We stayed in the trade. We had already our first position, our second target at the 93, and we waited for reaching the 93 is the second target. And we waiting for prices to get down to the 83. We said we see only this reaction, and now we're waiting here as this second leg was about to be built. We waited for the chance that the ongoing sellers here coming in, getting stronger and stronger. But you see, drying up the volume. Selling disappeared, and then buyers coming back one time and even at the top area. This was the moment when I said, now you can secure your third position. You can secure your third position here, because now we have a higher probability that they testing the area of the volume edge, which was at this moment here around the O level. Then they tested this. It took about 10 minutes. Then here they reached it, and now they playing going back into this upper distribution. This means we re-enter after decided that there is a too cheap price to get into the this cash value. This is happening here. They reaching it, and we see then increasing buying volume at this low volume node. That means we want to go back into prices pulled back. You see at this pulling back into the lower edge, we don't see any new sellers coming in. What means buyers stay in control and we want to go back. We traded through this range to where you remember where we saw this rejection from the morning, have now reached the 12-13 area. Now the same game. They take some profits now if they coming back to this area. And now you see the same, and you see the same thing, increasing buying volume and no quick rejection or not too much selling into the distribution again. Then we have even the chance that prices go up to this high volume edge at the 179.20. This is auction theory. And in the big picture, you see then, this will be then the area where I expected that there we will see the next reaction of the sellers here at the 20 area. What a, again, wonderful and interesting bond market. And I don't know how to tell it, but for me, this is, again, you see it is so much more controlled than the FDAX, where you have all this volatility and spikes and prices got traded below or above, and that creates some kind of uncertainty in your emotions. So you have to accept this. As long as you're no master in your mindset, DAX is really masterclass. This is really, 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 really more. It's harder to learn than the FGBL, the Bund future, where you don't have this overshooting. You can watch what is price doing at a certain level. You see then how tight it is. You see then how wonderful they're pulling back. So you can create better your edges and don't get to be into some. You don't get to so much noise, which you have to. Which you have to find out what is real noise and what is signal noise ratio. And in the DAX, the signal noise ratio, this is very complicated. All right. All right, market is now about, as the same thing appeared here, you see this here, that the price, we went above this edge here, and you see that volume came in again. It came in again, and we're now about to see if price is testing the 179.20, and it did. They bought, they paid the offer with 81 and 26 contracts here at the top. That means same thing here, as it was here when we re-entered this distribution here. See this rectangle, this gray, and we took out then the morning cash high, and now testing the pre-market edge. You don't see it on this picture, but here the pre-market edge is exactly at the 179.20. So price and delta tells you at the moment, at the areas where it need to be watched, what to do. So, and that's it for today. That means the most interesting moves we normally see normally we see a two direction moves in the Bund in this pre-market session, in this morning session, and this have happened today. So that means the most profitable, the most lucrative swings already have happened for our hypos, for my hypos, and that means my hypo 1 failed. That means you could have made a 1, 2, 3, 4, 5, 6, 7 ticks with the range long here, but then it failed on the small edge of the open range high. Price got rejected. It is more possible that you get out with 0 ticks without losing money. In my case, I lost with the first because it got rejected, and with the second I could reduce my risk, so I only made a few ticks minus. So it didn't work out. That was the overall trade from the long perspective, hypo 1. So that means I had one lousy trade and one good. The good, it was also the smaller losing trade. Then my short, my hypo number 2, with the increase of selling volume. You know, as I'm commenting this live stream and not being so quick enough yet, I wasn't able to move my target away from the preset at +4. So I immediately hit my target, which I haven't planned because, you know, my target area was at 93 and 80 and 93. So 93 and even 86 was hit before making the transition then to the upside. But so that's the game. I know that I have to get better then to be quicker, or I have to think of that my presets with +4 is bullshit, that I maybe set it now to +10. You know what? I will do this immediately with my target now, because I don't wanna get filled with +4, because this +4 is normally enough time in a range situation, in a range play, to be set then manually to the target where I want to see it. And it comes from earlier times where I worked in a range market where we hadn't this bullish Bund market. I worked with this 4-tick target as a preset because this was normally around the target area. It's even today the same, because in the range plays we have about a 5, 6, sometimes 7-tick target. So I now switch this to +10 because I'm more now into this I call them W plays and X plays. An X play is a trend play supporting the big trend, and a W play is for me a German word for re-entering, so Wiedereintritt. A W like Wiedereintritt, re-entering of a yesterday low volume node or a yesterday distribution. And this was by hypo 2 today. And as I'm getting more and more better and better and get higher hit rates, obviously the last 2.5, 3 weeks makes me, of course, now have to make some adjustments to my presetting. So I now changed my target area to 10 +10, so I have enough time, because I'm trading this live, and mathematics will work against me if my presettings are so bad that I hit the target I did not prepare, because I could have made easily this 93 target, so this would be then a +7, and so it's only a +4 because of the presetting. So that's bullshit. And anyway, but it's not about the P&L of a single day, it's about feeling joy and love with the process. And this is so much more important, because this is the things you can change then, and you can get in control of the things. That's the things you can control. The other things you cannot. And the other things will only work out in green numbers for you if you make first the things you can control supreme with a clear mindset. And number 2, if you're really good in your big picture preparation and your technical skills and reading the market. I think in the technical skills and reading the market, you see that I'm quite advanced, quite good. So you see it every day, transparent with my hypos, with my theories for the day, and you see that it normally 90% it played out one of my hypos, and you get good quality at the micro level with a small risk, and normally get a good reward. And so, yeah, I'm quite happy here with my progress, and I'm happy to share with you because this also makes me better. To making the things live, there is no way to manipulate yourself to make, say, there's an excuses or whatever. That's really good. That's really good. So Dr. Brett Steenbarger, who's working with the S&B Capital, he writes down once, I read it in the book of Mike Bellafiore, the playbook, and he writes, it's very good. You don't have to do this live stream like I'm doing, but it's very good to do some self-talk or to be aware what is the self-talk when you open a position, be in a position. And you know, as I'm doing a very I have another program, a psychological program. I attended an online class there and working with another psychologist here, and it's always the same. He tells the same. It's the most important thing is to measure the right thing. And it's also not only measuring the right technical things to develop good players, but also measuring the right things. What is a lucrative and what is a lousy trade? And I can tell you, this made me, the last 4 weeks, I made another so big progress in my trading, as I see that there are still some things that I can get better, what is controllable, what can be controlled. And I don't have to be so feared about the things now anymore that I cannot control, because I see that I'm so good already, understanding the market, understanding the flow, and now seeing there's some little adjustments, getting a little bit better in my mindset, but I'm quite satisfied already. And some of the technical things I see, wow, if those technical things now would be not so good, it would be much harder now to get the next step into your mindset. So please, always, try first, understand the market, okay? Understand market participants. Get your technical skills. Get your technical skills and learn how volume profile works. Start market profile, then go volume profile. Auction theory. Then go into place development. Then go to your mindset. And in this row, so I mean, for me, long time of my trading career, when I working with the school when I started 2.5 years ago, there was everything around the technical thing and the technical theory. We had some little contact to psychologists, to some neuroscience guy from Frankfurt, who was very interesting as things talking about this process. And our teacher also got into this process of thinking fast and slow, Daniel Kahneman, all this stuff. That's where I was the first time I made contact to this whole theme of psychological in trading. But then I didn't follow it anymore. And after 1 year, and you see that you're not making any process, I was wondering, hey, I got the skills, I know technically it's not so bad. And then I re-entered it again and find out that this psychological thing, that seems some kind of be important. And yeah, absolutely. I would recommend everybody to work some kind of psychological mentorship, or at least an online course to get more training in your awareness, to know how important it is to have a morning routine, how important it is to know what your brain is working. So I would definitely recommend, again, reading the book of Daniel Kahneman, Thinking Fast and Slow. I would definitely recommend to work with them, or do some online courses of some of the well-known psychologists for traders there around here. I know 2 American, and there's only one German, but I think even the American, even they're not so expensive as some coaching is here from this German guy. But I would definitely recommend it. If you're really taking it serious and really want to make it for a living, you're trading, then either you're a nature talent and are so good in your emotional thing, then it's wonderful, that's okay. There are some people, they are so good. But if you're not, there's no shame to feel then. Be self-critical on you. It's no reason for it to be, because then it's maybe just some lack of knowledge, and you need to train your brain, and you need to create new behavioral patterns. And is it really so bad to get some help for it? I don't think.
If you want to be a professional sportsman, sports guy, it doesn't matter if you play basketball, soccer, football, baseball, no matter what. You also get some good trainer. Have you seen some top team in any professional league who's not having a good trainer, having not good individual trainer, having not physiology, having not a good maybe also mentor and psychological? Have you seen every? I don't know this, but you have to say in training that's the same thing. It's really something. It's something that is really a top level thing you can reach in your life. To get profitable trader means you having control. You have a life without the control of being in a company and everything. And if you really take it serious, if it really would be so easy, don't you think everybody would do this? And it's not like this. Remember the studies from the German government from the early 2000 years, where the opposition they made a proposal for testing how many accounts of retail traders were deleted, so failed, and this was more than 90% of people failed with their accounts within a period of, I think, 1 year. And the same thing was tested in France. The same thing, there are studies also in the US. So that means most of the people lose money with trading. It doesn't matter. Daniel Kahneman wrote some interesting sentences in his book about economic and behavioral science and about the new prospect theory. And he find out it doesn't matter if you're having a high degree and have a doctor, or being a professor, or being just a normal guy. It doesn't matter. You will fail in so many things when your survival brain is triggered. You will fail because you're not able to work then with a clear mindset anymore. And there's so much distractions that you don't aware of, but it's taken place right now in this moment, and you think it was under your control, but this is not the case. And if you're not consistent profitable, you don't have to feel ashamed. If you're one of this 90% people who try and even be very, very disciplined and not being consistent profitable, it's not a shame. You just have to think. If you're still at it, trading and having fun and want to reach it, then you just have to think about, could it be then some psychological thing? Could it be then that your survival brain manipulates the progress of your execution phase and your management phase? Is it then that you're always trying to find new indicators, new systems, and make adjustment on your plays and nothing changes? Is it then that maybe your plays or your technical skills are already good, but no matter what you do, you're still losing money or underperform? Think of it. Is it maybe then it is your emotional old behavior patterns who make you trade the way you are? And no matter what, even if you're not 100% technical skilled, even if you're not 100% expert in auction theory and profile and market profile and volume profile, even if you're not 100% expert in picture preparation, you know what? But you're not a loser. You know what then to do? Then it's also time even more to work on your mindset, because then you can find out then, as being aware, to find out which one now. Please start now to find out what are your lucrative and what your lousy trades, not what is your winning or your losing trade. Because by measuring P&L, measuring losing trades may be a good loser. That it happens to me as well, but it can also be a bad loser. Then it's a loser. And a winner can also be a loser. A lucrative trade, can also be a losing trade, because market just didn't pay you. But with your edge in 6 out of 10 times or 7 out of 10 times, it would pay you. But you know what? As long as you cannot make a difference between losing and winning trades, if you don't know how to make a difference and separate this by rating them as lucrative and lousy trades, once you know this, then you can start to measure. Then you start to measure the right thing. Because then you measure how many of your lucrative trades bring you an edge. And if you see them, wow, I have lucrative trades, and I would, let's say, I would get 6 out of 10 trades I would get a good 2-1 winner and 4 trades a half the risk losing trades. Then you would say, wow, it's great. So the problem is not to make the decision to change your trading because you see, oh, I've lost. Oh, I don't want to have a loser anymore. And then you change it. But what you may oversee is that this loser was a good trade. And then you find out that this loser was a lucrative trade. And it would be bullshit. And it was bullshit all the time in the years ago when you're starting to develop new plays and new strategies based on lucrative trades. There just was randomly just sometimes losers. So it's so important. Separate lousy and lucrative trade. So again, as you see now, market for me, nothing to do now anymore. We see the two swings already. We are now reached this area here at the 17, 18, 19, 20 area. And now we are in some balanced mark. Volume's drying up a little bit. And you see this here in this small little candle down here in the delta here. See this in the 15-minute charts here? And you see, so most of the profits were already could be made today. Hypo 1 only a 0 to a little bit minus, and Hypo 2 worked out pretty good. Get you at least 7 to 10 ticks with the first and second target. Target 3 must be cancelled here, but you even there you even get a 1 or 0 tick, so no losing with the third position. And now we're in the balanced modus. So nothing to do. As long as no outside material information coming into the market, as long as we're not taking out and getting into a trend again, or having some increase of volume at the low or at the high, there's nothing to do for me. But I will stay live, till 11, and if something has happened, I will get back to you. Yeah, see now the highest tested from the pre-market edge was at 20. 179.20. We see now people trying to get above the pre-market edge, and if we take a look at the window, the 15 minutes charts, one can see, you know what? If this is an area to trade, I don't know, because you see there's some little bit space to unfold, but only for me to the 27, 29. I would be a little bit skeptical here for this long trade, and would more look then for the failure pattern, and then prices coming back to the 12-ish area. This is just not the bullish breeze that we have today, as we have some blurred distribution up here. So really stronger market would be only if we take out here the highs of yesterday overnight session and building volume around here. So this is just randomly trading around, finding some balance again. So I'll stick with this. This was it for today. So the most good intraday moves had already taken place. Nothing to do for me, and I'm more there's no good risk reward here around, and also now I'm still expecting more the prices coming back with the, if there's a rejection again here, as we've seen the rejection already here at the top. I'm more expecting the prices coming back here to the 12 area, so at the moment POC, and nothing to do. So So you could see here, um, prices went back to the POC. It's as I tell you. See the attempt here of buying volume coming in, but you see also then at the top. I said this is no area where I would look now for a long, because where would this long lead to? I mean, maybe to the maybe to the edge, to the LVN here at the 27. Okay, wow, 2 or 3 ticks, or fill out this little small blurry tiny value from the overnight session. I don't know. I don't care. All right. So it's more probable than what you see then all the time here. That the market, you see the whole profile here, that the market then testing back the POC. And we got up here, you see there's nothing at the top. There's still a lot of players till we have reached overnight high at the 66, and I don't know. We're not at the time now from the market now, from the morning, and you see here, this is just now balanced. Some people try to push it higher here, but you see in difference to this here, where we trying to get into higher areas, see that as they pulling back, we don't see impact on price. Here we see impact on price. As they pulling back, they switching back at the high level to buying again. Here we did not switch. We see pullback, red candle, some minor green and then red, some minor green, holding but lower, and boom, putting out and testing the POC again. And then buyers coming back again. So, but there was the high probability at this moment where they pushed out the longs. Again, no follow-up volume. You look then, if you want to trade this, I don't want to trade this minor micro reward scenario, but you could have traded this with a target around the POC. So with the 3 to 4 ticks, you could have traded this because this was more the signs of responsive selling and not the initiative going on like we had here or like we had as we entered this scenario here. I mean, look at this. Make it bigger here. As we went to the downside and look here at the delta, as we coming back here, look at the difference. We coming back to the Schuler here. You know, we can now test this volume edge. They test the volume edge, and now look at this. Look at this. The initiative buying now taking place here at this moment and taking out the high of this shortish distribution created by the selling initiative selling starting here from the 179 area, and now boom, they take out, you know, there's the upper distribution from morning, and see how in this moment when they pulling back, see how green the delta stays at this moment here when they pulled back here, these 2 candles. You can look then here for the entry because you're not seeing a rejection, and you're seeing now rejection in delta. You're only seeing acceptance and then boom, pushing in again. So you have a good reward here of taking around here this morning area where you see here where the long could not reach higher areas than an open range high. This is different, isn't it? And look at this situation here. When they're going up, taking out, trying to invest some buying volume, boom, at the top. Okay, very good first sign. But now we want to see with the follow-up candle, with this here, we don't want to see already responsive selling at the top. And do you see, please take a look at the data. Do you see the sticks here of these candles? Means boom, boom, boom. Reaching the top area, boom, 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 selling. Reaching the top area, boom, 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 selling. And pull back with negative delta. So internals here in terms of delta, negative. So once you see them boom, putting out the shorts, the longs, you see trying to get back in the structure and know the target area around at the moment POC. This is what you have to think, and in terms of volume profile and auction theory. So again, you can say clearly here at the 15 minutes, here trying to expand the high, seeing the no follow-up bias after this first initiative buying, and then you see, going back to the 3 minutes, 1 minutes charts or 30 seconds charts, sorry, that they even don't only test the POC, then trading back, and then falling out, filling out again the whole distribution here, and testing the lower edge here at the 05 area. So you see this? This is paradise for the short-term traders, and I think that's it. A wonderful Friday, wonderful, perfect to learn, perfect to get better, perfect to know your edge, to know, to train your mindset and see your technical skills. I think wonderful, a very interesting week, and yeah, I'm looking forward to see you guys then on Monday next week with another new week and another new session. We will see how markets develop in this very, very stormy market environment we now having with Hong Kong, with the Chinese-US trade war, with the European markets also having some struggle as the economy growth are really slowing down. So it's gonna be interesting, and it's gonna be a lot of more things to learn. So thank you for watching. I will end the session. This is Anton Höpfel for Manapa Trading, and recap later then in the afternoon. Bye bye.